The BRICS nations have been growing in popularity with lots of incoming interest, and there's a bunch of people from my staff in Africa to different people on the internet and financial Twitter, etc., who are talking about and asking whether we're in a situation where the US dollar is about to decline, about to be taken down. Certainly the DXY is down from the peak by a reasonable amount. It's kind of been in a downtrend, etc. And today I'm going to talk to you a little bit about what's going on with BRICS Rising. What can we expect in this respect? What is going on? What are some of the updates that you might not know about? Some of the interesting data, which has reached kind of an interesting tipping point. I'll give you a mental model for thinking about sort of how things work in the world, and we can kind of discuss it, put it in the comments, what you guys think about the theory. And we will talk about the US dollar and what the status is with it over the next, we'll call it year, 2 years, 5 years, 10 years. So let's dive in and discuss. Before we do, if you haven't already, please hit the subscribe button, hit the all notification bell. Thank you for being here. Welcome. I am Michael from Offshore Citizen. We are some of the foremost international tax experts, helping people specifically. Certain experts will deal with a specific country. We deal with what happens when you cross borders. And so helping you to optimize things from a global perspective, both in terms of immigration, so if you're going to relocate to another country, etc., as well as setting up your businesses in other countries to lower your taxes, optimize your payment processing, your banking, your costs, your asset protection, etc., in order to deliver you fundamentally a better life that is more to your kind of personal taste. So if you're interested in that at all, please reach out to us. You can book a call with me, calendar.com/Michael-Rosmer. There's a link in the description below, or you can send a message through offshorecitizen.net. Okay, so very quickly, what is BRICS? So BRICS is a consortium of countries. So it stands for Brazil, Russia, India, China, South Africa. Although I would say that, adding in Saudi Arabia and some others is certainly kind of a thing on the table. So this is a little bit more informal. I guess you might say that you compare it to the G7. And interestingly, the GDP PPP of the BRICS nations just exceeded that of the G7 now. So not raw GDP, the raw GDP is still higher. You'll notice that GDP PPP, for instance, in China exceeds the GDP PPP, which is pricing power parity. So this is essentially looking at, based on kind of what individuals, how far their money will go locally. That's essentially kind of the basic idea of PPP. And so in that sense, there's more GDP in China than there is in the US, although China's GDP still lags the US dramatically in nominal terms. So there's still a pretty big gap that needs to be closed there. And we'll see if it does or it doesn't. That's a whole other conversation. But the bottom line is that it is an interesting indicator that these countries collectively, their economies, have added up to quite a significant amount, and it now rivals the G7. So that's interesting. Next, there is a move from about 20 different countries around the world, including places like Argentina and some other major, Mexico, etc., some of the other major economies in Latin America, Africa, Asia, etc., who are interested in joining BRICS. And this is a pretty significant trend, I would say, that illustrates a few things. So one is they've sort of set up their own alternative to the World Bank and IMF. It's kind of their own development bank structure. And that is probably because of the fact that historically what we've seen are that the terms from the IMF have typically been fairly predatory in regard to a lot of these nations. Even if we were to think about somebody like Stephanie Kelton, who is a very prominent modern money theory economist who has advised various different presidential administrations throughout the book, The Deficit Myth, even she, who is for printing money and doing all sorts of things that are probably more excessive than a lot of people would think in terms of spending, etc., she tends to say it's a terrible idea for countries to accept IMF money. The terms are generally quite poor for that country. And so it makes sense that these other countries would be interested in some alternatives. Now, the other thing that's happening, of course, is you have this sort of deglobalization as the US is pulling back influence from some places. And one of the interesting observations I heard a week ago was somebody said, just because of the fact that the US is deglobalizing doesn't mean that China is deglobalizing. And I think this is an interesting observation. We tend to think very often, maybe partially because of the media and partially because the US is the largest economy and certainly the largest military power, in US-centric terms geopolitically. But the reality is, as we've just pointed out, GDP PPP, the US is not the most significant. Collectively, it's it's dwarfed by some of these other places. Even if you add in the EU and kind of some of the traditional allies, we just saw Macron gave a speech the other day saying that he thinks in the event of some dispute over Taiwan, France in particular, but I guess the EU in general, he's advocating for more EU sovereignty and power, should not be dragged into the conflict between the US and China. And it was viewed as kind of a bit of a blow against support for the US in traditional terms. And so I think we're seeing that type of influence or that type of thinking taking place in the world. And then you can ask, well, why are all these countries interested in joining? And one of the comments that I've made a few times is we obviously help people with citizenship by investment programs here. And what you'll see is there's a lot of bullying going on of these small countries that have citizenship by investment programs. And frankly, it goes beyond that. For example, Uganda recently said they were going to bring in some anti-homosexual legislation. And whether you agree with that or not, the US said, if you do that, we're going to sanction you. Well, it seems a little heavy-handed, a little interventionist. I think a lot of these countries want to say, you know what, we just don't want anything to do with you and your policies and your politics. Like, you go do you, we'll do us, leave us to self-govern. Another example of this is the US was going around to a lot of the Latin American countries telling them, you should send weapons to Ukraine, and if you do, we'll replace them with modern weapons. This is kind of the deal. And they were basically told to go to hell by a lot of these countries like Brazil, etc., saying, listen, we don't want any part of this. We don't want to be part of a war. We have no interest in that. You guys go and take care of your own things. We're not being part of it. And this was a pretty unanimous Latin American perspective, which we've seen. I mean, if we look at kind of the condemnations of Russia by various nations, of course, you have countries like the US and across the EU, Switzerland, UK, etc., all being very anti-Russia. Well, you'll notice that India didn't, Brazil didn't, Mexico didn't. You can start running down the list of actually quite a lot of countries were not condemning Russia. And whether it is that you agree or not with that decision, I don't think that's the point. I think that what we're seeing is a lot of countries, as they're reaching a point where they're more self-sufficient and more significant internally and able to kind of build their own momentum, are starting to say, we don't really like this American interventionism. We don't really want to involve ourselves in your conflicts. We want to kind of focus on ourselves and our own priorities. And that's really changing things. On top of this, the big point, which I made some comments about around the time when it happened, is when they sanctioned Russia, one of the things they did was they cut them off from the SWIFT network, and they basically seized their US dollar and euro reserves, which amounted to hundreds of billions of dollars. Now, traditionally, the US dollar is this safe haven asset. And because it's a safe haven asset, a lot of countries would rather keep their money there than somewhere else. A lot of banks would, etc. And it was considered, hey, look, it's safe, right? Do I want to keep my money in, I don't know, Argentinian currency or, Mexican currency or Brazilian currency? No, not at all. I will keep it in US dollars. I think the US dollar is stable. They have a strong system, a strong rule of law, etc. Well, suddenly you shatter that belief and you say, well, hang on a minute. They did it to those guys. What could happen to us? We should probably worry about this. And if you think about it on the global stage, certainly the Chinese RMB is not a particular, can you trust China? I think a lot of places don't think they can trust China, although China is making active investments into places like Africa, kind of currying influence there, etc. Even though that's happening, there's a situation where, you say, can I trust the Chinese communist regime? Probably not. But when you're like, well, I can't trust the Americans and I can't trust the Chinese, clearly, now you're like, well, maybe I'll diversify a little bit. Now, there are some things about that argument that, we're going to move to the Chinese RMB, which I think is kind of the Ray Dalio position, or that we're going to be in a situation where we're going to abandon the US dollar or something like that, that are a little bit short-sighted. And so this comes to the other part of it, which is, yes, definitely BRICS is rising, and I think BRICS will become an increasingly significant force over the next 20 years, call it. The thing to understand, I think, I've had this expression that I've been throwing around for the last, I don't know, year or two, which is the problem for those who can predict, who can see the future, is it always appears closer than it is. And one of the big lessons that I have learned over the last number of years is that you might be right about things, but those things often take much longer to play out than you might believe. A good example of this is inflation coming down. I have good friends who were saying, oh, we're going to see 2% inflation by year over year by December or something. And I just went and said, well, hang on a minute, you only have the roll-off effect of the last month. And so most of the price is always already baked in, which means you just can't have it. And so I made the prediction at the start of the year that we would have sub 5% inflation by July at the latest. And we hit 5% this month. So we're well on our way. We have the next big roll-off. This was a big one, March, and then there's another in May. So we'll clearly get there. And it's just a math calculation. But the point is, you might think, oh, this thing is beaten, so hence this should come down. It's like, well, no, it takes time to trickle through. And the same is true when we're talking about geopolitical shifts, right? Alliances, it's shocking how long treaties take to get negotiated. If you just go and look at tax treaties as a simple example, what you're going to see is very often they'll say under negotiation for years. They'll get signed, but they're not ratified. This process is a really long, slow process. It was one of the things that I was mentioning with respect to central bank digital currencies. People are really concerned about that. I'm like, well, hang on a minute. Have you ever run an IT project? I've built fairly sophisticated software, and it just takes a long time. And I remember sitting down with developers when I was starting saying, how long is it going to take? We're like, oh, we can bust this out in 2 months. And then, a year later, you're still not done. It's just really hard to actually build things, do real stuff in the world, get people on board, get things coordinated. This is a very slow process. Even when you try and force things through, if you look at during COVID, for example, there was a bunch of accelerated things. Most countries are not able to accelerate that much. So this is a pretty important understanding that yes, BRICS is rising in significance. BRICS will almost certainly continue to rise in significance over the next decade or two. I think it's pretty inevitable that they will gain a lot more support than the G7 has. They will dwarf them not just in GDP PPP terms, but also raw and nominal GDP terms. I think this is highly likely. And part of the reason for this is a basic theory that I have, which is, generally speaking, when you have two parties, one is exclusionary and one is inclusionary. The one that is inclusionary will win in most cases. And why is that? The main reason this is the case is because there's more people outside than people inside. And therefore you have to ask yourself, okay, if all these other people are permissive and we're not, at the end of the day, do we want to do business with them? We probably do. And so what, are we just not going to participate in that group? This is a powerful incentive, right? Fundamentally, there's the Charlie Munger quote, show me the incentives and I'll show you the results. And the incentives here are that you need to be able to do business with all these other countries. Brazil isn't going to deglobalize. Mexico isn't going to deglobalize. India is not going to deglobalize. China's not going to deglobalize. The US can deglobalize, but then they're not participating in, and they're removing their geopolitical influence from this broad base. And so as there are these other countries that are more open, less exclusionary, et cetera, I think they're going to get a lot more support, and that's going to build its own momentum. And what's good about this is a lot of these countries on their own are quite small and insignificant. This was kind of the point I was making about the citizenships, is you see this bullying that is happening towards, say, the Caribbean islands. Well, any Caribbean island on their own, pretty insignificant. You're talking about tens of thousands of people at most. Then you can go and you can say, well, the CARICOM countries together, now you're talking about a few million people. So that's okay, a little bit more, and the economy is a bit bigger, et cetera, but not that significant. Now, as you start to have these band together into something like BRICS, now it's really significant. Now you've got a lot of negotiating power. Imagine if you have BRICS as an organization sitting down, negotiating with the G7. Well, you're basically on equal terms because the G7 is really reliant on the BRICS nations. This is the advantage to some extent of the EU. A lot of these EU countries are pretty small in terms of their economies. They don't have a lot going on. So, what is it that they're going to do? How can they avoid being pushed around? But collectively, the EU is about the size of the US, right? In terms of, again, GDP terms. So you're like, well, that kind of puts you in a different negotiating footing. If we're negotiating the US with the EU as opposed to the US with Greece, it's a big difference, right? So there's a built-in incentive for a lot of these small countries to come together, and as they start to get a banner that they can rally on, I think it's inevitable that that will happen. What does this mean for the US dollar? The US dollar is going to remain strong for the next while. So the US dollar is not imminently dying. I saw some stupid headline from someone who, they've been wrong so many times, their models are completely off. I just don't understand how people even follow and give any respect to these people. But that being said, it was like, oh yeah, the dollar is tanked and they've got these, things about it. No, this is not true. The reality, if you go to Turkey, is the people on the ground are dollarizing. They're not using they're moving away from the Turkish lira and wanting stuff like US dollars. If you go to all sorts of parts of Latin America, people are dollarizing, not the opposite. So although yes, it's true that at the national level, there's a general, we're at the kind of like the cusp periods of moving away from the dollar, or kind of finding alternatives, getting, say, trade of oil in other currencies, etc. Although we're at the early stages of this, we're still in a situation where the dollar is very strong. We haven't seen signs that the US dollar as a reserve currency, if you basically look at the global reserves, in historic terms, we're actually really not that low. We're, I think, around 60%, something like that. And if you go back not that long, a few decades, it was dramatically lower. So yes, it has been higher. We are down from the peak, but we have seen nowhere near the signs of this collapse that would be required. And quite frankly, it's really not possible at this stage. So in order for people to move away from the dollar, you need an alternative. And the reality is you need liquidity. So I'll give you an anecdote. I was talking to one of my employees in Kenya, and he was telling me about how there was dollar shortages there, right? So you're like, okay, there's more demand for dollars than there are dollars. That's interesting, right? And I asked him, I said, hey, would you like to hold Kenyan currency or would you like to hold US currency? He's like, US currency, of course, as an individual, that's what I'm gonna hold. Far, far better. All across Africa, this is gonna be the case. People are struggling to get out of South Africa. I have clients all the time now contacting me saying, look, we're afraid for our money, we're afraid for our currency, we're afraid for all these different things. We want alternatives, we want to get out. This is the case in a lot of parts of the world. And that train has still not played out. It will play out at some point in time. But I think it's really dangerous for people to get ahead of themselves. There's this kind of expression in investing that being early is the same as being wrong. And there were people who were buying gold in 2013 saying, oh my gosh, this is so great. And they missed, the next 7 years of an incredible stock market bull run. It was, eventually, it's true, gold might take off. That's possible. Will it be next year? Will it be the year after? Who knows? But at some point, there will probably be a nice bull run in gold. But if you sat there holding and you're basically at break even after 10 years and you missed out on one of the best decades in the history of the stock market, well, that's not so great, right? So the same is true here. It is premature for people to call for a death of the dollar. We're not close. We're not going to move to the Chinese RMB. We're not even close to that. The British pound is not an option. The euro is not an option. I heard somebody say an interesting comment the other day. They said, the US dollar is still the most attractive bachelor in the leper colony. And so you might not like the US dollar, but you need to consider the US dollar on relative terms. You need to consider that the US dollar is basically pegged, or the RMB, sorry, is basically pegged to the RMB. And that's kind of artificially pushing down the cost of exports from China, which is making China a competitive economy. If China free floats their currency, likely it will pop. That'll make Chinese goods and services much more expensive, which is going to make it much less attractive. So there's a whole little bit of game theory being played in that regard. And it's just fundamentally not a situation where we have some alternative. Bitcoin has not nearly got the liquidity or the support, etc. Gold, same thing. We're just not at that level at this point in time. Maybe at some point in the future, maybe there will be some totally different currency that will come out. Also possible. There's been talk that BRICS will maybe come out with it, but we are not there yet. And the implementation time on doing something like that, if you just go back and look at the history of how long it took from the time they started planning the euro until the euro became implemented and actually kind of phased in fully. And you're going to find it's a pretty significant period of time. So I would say minimum of 10 years before you have some issues. maybe like there's probably a strong reason that you could make an argument that like 20 years out from now, that you could be looking at some changing the guard, in part because of other internal things going on in the US that may weaken it, et cetera. Anyway, I hope that helps. Let me know what you think about kind of these ideas, these theories, et cetera, and I will look forward to seeing you on the next video.